Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Now in front of you, you have the Nifty spot weekly as well as the daily time frame chart. In the right hand side, I have the daily time frame chart which clearly shows us that the trend is currently down as the price is trading below the dual moving averages, and on the left hand side we can see that the trend is pretty much lackluster and it is flat because it is trading between the dual moving averages. Now this bounce back which has recently happened, especially which is visible very clearly in the daily time frame chart, this bounce back has come on the back of two different supports. One is the 38.20% Fibonacci retracement, which you can see here, and second one is this particular high. So these two things, retracement and this particular high, both come together and they have been able to provide a decent bounce back in the Nifty spot right now. Now the question is that whether Nifty has bottomed out or this is just a dead cat bounce in last few days or this bounce back will continue. Well, first we need to understand that in this particular bounce back, Nifty has already tested this particular zone once. And this is a resistance zone, short-term resistance zone where the coordinates are 19,331 to 19,221. Now after testing, immediately we saw a sell-off for 2 days and then again we saw a pullback. Now in this pullback, once again we are testing this particular resistance zone. The way volatility has extended in the last 2 days, it makes sense that some sort of consolidation should happen for the next few days. And if we manage to close above 19,330, 350, then maybe Nifty will try to test 19,440 or maybe a little bit higher, maybe 450, 460. But after that, again, what will happen is a pretty big question mark because it's very difficult to assume as of now because a lot of volatility is visible in the markets due to the result season. Bank Nifty chart. In Bank Nifty chart, you can see that the prices have corrected. They have tested the 50% mark, and this 50% mark in the weekly time frame chart is coexisting with the recent high, and it is a decent support for Bank Nifty in the weekly time frame charts. In the daily time frame charts, what we can see that there has been a sharp bounce back. All right, there has been a sharp bounce back, but although in this bounce back, if you see the candles, the last three candles, all three consecutive candles are doji, and doji is generally a sign of, basically no clue whatsoever what market wants to do next in the next few days. So according to me, I guess as a trader, a little bit more consolidation might be possible. I guess once Bank Nifty comes at this level, 43,857, or maybe somewhere around 44,172, somewhere between this level, and then if some sort of sell-off is visible, it could make sense for swing traders possibly to look for short trades on the downside. But again, you'll have to be careful. When that happens, again, what are the price patterns which are visible on the chart? Which are the stocks which are supporting this particular correction? All that things you have to keep in mind because nowadays what I'm seeing is that the private banking stocks are trading in some other direction. PSU banking stocks are trading in some other direction. That is why you need to be very careful. Now, if you have a look at the PSU banking chart, it is one of the sectors which is looking slightly better than other sectors. And again, if you compare private banking pack and PSU banking pack, there is a major difference. In terms of strength, yes, some strength is surely visible in the PSU banking index chart. I'm talking about the index chart. But if you immediately go to the stocks, then things are slightly different. The king of the stocks, SBI, in the daily time frame chart, it's looking lackluster. You can see lower highs, lower lows visible. In the weekly time frame chart, it was impressive when it was trading somewhere around here. And a lot of consolidation possibly spoiled the momentum, and then now it is clearly visible that it is in a Dow theory characteristic downtrend in the daily time frame chart, which can only be changed if we close above 607. And immediately if you have a look at Bank of Baroda, now this particular stock is slightly better than SBI. All right, the way it is trading, the way it is holding itself, it's slightly better than SBI. Again, if you look at Canada Bank, it's showing supreme strength in comparison to other banking stocks. Yes, then PNB is again, I should say in the weekly time frame chart, it is okay. It's not bad. But in the daily time frame chart, I guess it's lacking momentum. Yes, it has bounced back, but not strong momentum is as of now visible. Okay. Now let's have a look at the private banking pack. In terms of private banking pack, what we can see that the entire bounce back, the recent bounce back is happening due to this 50% retracement, although the prices have not tested that retracement. But at times what happens is, market has a mind of its own. It understands there is some sort of support happening over, there is some sort of support, and before even testing the support, prices start bouncing higher. And with this particular price, with this particular Fibonacci, there is also some sort of cluster over here. So both these two things, one is the Fibonacci, second is the price cluster. Both these supreme support things are helping the prices to bounce back higher. Again, if you have a look at the candlesticks, you can see that there are 3 consecutive dojis in the daily time frame chart, which are clearly showing us the signs of pretty much cluelessness in the private banking stocks. And according to my analysis, some sort of pullback should happen, some sort of consolidations should happen. And when private banking stocks, private banking index goes a little bit higher, after that, you will be able to understand that whether are we looking for again a bout of selling, a fresh bout of selling, or this was just a correction and it is over and once again we are starting a new rally. Only then we will be able to see. I guess it's again wait and watch and see what happens. Okay. Energy pack. Energy pack, in the weekly time frame chart, yes, we can say that there is a hammer and there is a bullish bell toll. It is okay, fine. But in the daily time frame chart, things are slightly, I should say, pretty much not exactly a downtrend. In terms of Dow theory, yes, you will say that as per characteristics, you can see a lower high, you can see a lower low also. But overall, if you check properly, if it is a big downtrend, you will see big swings in terms of percentage. But this percentage change is very, very small. So more or less, I should say it is just a consolidation, nothing more than that. And as of now, I would like to wait and watch and see what happens in the energy pack. Before that, I would not give my view on this particular sector. Metal pack. Well, metal pack has corrected a lot from its recent highs, and it's trying to take a support at this 38.2% Fibonacci retracement in the daily time frame charts. Well, some sort of pullback should happen because what is happening is the sector is trading at a 161.8% extension in the daily time frame chart and at a retracement level in the weekly time frame chart. But once this pullback happens, a sharp pullback of maybe 3 to 5% in the stocks, after that what will happen is it's a big question mark, because as per Dow theory, you can see that we have already been making a lower high and we have also made a lower low. If you see, this is the first high, this is the second high, this is the first low, this is the second low. So in case if we bounce back and after that bounce, what will happen? It's very difficult to see, very difficult to say. And if we close below this low with a big red candle, then yes, you will be able to see some sort of weakness coming up in the middle pack. All right. Now, let's have a look at the auto pack. Well, auto pack, I guess something fishy is happening because what is visible is that price is sticking to this 261.8% Fibonacci extension, and it is giving a lot of respect. And above that, if I convert this chart into a line chart, oops, I was trying to convert the weekly time frame chart actually. All right. So if I convert the weekly time frame chart into a line chart, then what is visible that we have a higher high. And in the weekly time frame RSI, we can see that we have a lower high. What is it? It's a classical negative divergence. Now, if you similarly at the same time, if you try to have a look at the daily time frame chart, you will be able to see that there is some sort of double top formation happening. Although I'm not a very big fan of patterns, but yes, some sort of double top pattern is visible. And once I guess this particular zone is broken of 15,600 with a big red candle on the downside, we could see some sort of correction coming up in the auto sector and auto stocks. Well, the stocks which can get affected as of now is the heavyweight Maruti. Okay, this particular stock has rallied a lot, but it's just going up and down. If it breaks this support, and even this one somewhere around 1930 and 9930 and 10,086 on the downside with a big red candle, then maybe some sort of profit booking will be visible. And apart from that, there is one more stock which has rallied pretty impressively, and that is Bharat Forge. And if you check this particular stock, the way it has rallied, it has been impressive. There is no negativity in terms of a negative divergence or something, but some sort of profit booking in the short term will be good for the stock if the stock wants to continue rallying in the medium term, not in the short term. Some correction is, I guess, according to me, it's welcome. Okay, because it cannot happen that a stock or a sector can keep on rallying, forever. It will be completely unsustainable. Finance pack, according to me, in the daily time frame chart is looking weak. You can see that it is clearly showing lower highs and lower lows, and currently it's trying to pull back. Well, after it tests this particular zone somewhere over here, I guess we'll have to once again start checking the daily time frame chart and see whether this is just a pullback or does it surpass this and goes higher. If it closes above this, it could lead to a trend reversal. But if it doesn't surpass that particular level and starts, after the consolidation, it starts dropping down, then maybe swing traders will be able to fancy their chances in this particular sector. All right. Consumption pack. Well, consumption pack currently it's very much choppy, very much range bound, not much big trends are visible. Overall, it's just going up and down, up and down. But I guess what has happened over here is the consumption pack has been able to bounce back from this 127.20% Fibonacci extension on the downside. If it breaks this level with a closing basis big red candle, probably some selling will be visible in the coming days. FMCG pack, extremely lackluster, very much sideways. I would not like to give a view on this particular sector. In the daily time frame charts, you can clearly see it's just going up, down continuously. And in this sort of market, in this sort of consolidation, it's very difficult to make money. And in fact, I would avoid taking positions in the FMCG pack as of now. I would rather be late, but at least initiate a trade which is slightly having more confirmation, whether it is on the upside or it is on the downside. Infrapack, again, I can say that this particular sector has inflated. It has gone up pretty high. As of now, in the daily time frame charts, what is happening is, I'll just try to highlight. It's a rally, a drop, again a rally, again a crack, and then again a rally. Well, according to me, if the entire sector wants to keep going higher, it will need to close above this gap convincingly for a couple of days and then keep rallying higher. If this doesn't happen, then possibly the chart of, just give me a second. Okay, the chart of the Infrapack will get distorted and probably some sort of profit booking could be visible. All right. IT pack. Well, IT pack has corrected a lot from the upside and it is trying to bounce back due to this particular Fibonacci extension. If I try to convert this particular daily time frame chart, it looks like a divergence. If I do not convert it into a line chart, it will look like a divergence. But if I convert it into a line chart, it will clearly show us a higher low in the price and a higher low in the RSI. So this is just a small learning for all of you, that at times when it looks higher high or a higher low in price, it is always advisable while checking positive and negative divergences that you should convert that particular chart, candlestick chart, into a line chart to have more clarity. Now coming back to the IT pack view, I should say that a lot of weakness is visible in the daily time frame chart. If it breaks this low, I guess some selling will be visible. But according to me, it's very much necessary that after such a sharp fall, some sort of profit booking, some sort of consolidation, sorry, not profit booking, some sort of short covering should be visible on the chart. Once this short covering will be over, after that, what will happen is slightly difficult to say as of now. And I guess we need to keep some patience. We need to wait, watch and understand and see what happens in the market in next few days. Pharma pack. In the pharma pack, it's clearly visible that we had a higher high in price, lower high in RSI. It's a classical negative divergence for sure. We have been able to break this, but after the break, immediately we saw a pullback. In the daily time frame chart, the trend is still down, and this pullback has happened due to this particular gap over here. So once this gap has been filled and once we close below this low, again some selling on the downside will be visible in the pharma pack. PSU sector. Well, PSU sector continues to remain extremely overstretched. You can see that the prices are trading around the 261.80% Fibonacci extension. And this has been a pretty decent chance for swing traders who ever have taken positions in this particular sector. If you're holding PSE stocks and they are going up, well, it's good for you. Try to hold these stocks with trailing stop losses, and whenever you see this prices hitting this particular high, try to book partial profits. And once I guess you have booked profits, be sure that you keep your stop losses very, very tight, because I can clearly see that this particular sector is pretty much overinflated on the upside, especially until and unless it doesn't surpass this high, doesn't stay above it, doesn't clear this resistance zone, it is slightly risky. Real estate pack. The recent rally in the real estate pack was pretty much good, especially for people who traded DLF. You can see the way it has gone up. It was a pretty good chance for swing traders, and probably it's time to book partial profits on, or maybe even a little bit more in this particular stock and in the real estate pack if you are a swing trader. And then rest, obviously, you can hold with trailing stop losses. Midcaps. Well, midcaps, if you check the weekly time frame chart, they have corrected. It closed below this 23.6% Fibonacci retracement. But if you check, the close has been above this retracement. So a sharp buying is visible. Now, it's very difficult to say as of now what's going to happen. But according to me, if the weekly time frame chart, you can see the way it's overinflated. If some sort of consolidation continues in the price for next few weeks, not days, I guess it'll be really good for this particular sector, because I always say after a big stupendous rally, it's very much important that some correction, some consolidation should be visible if you want that rally to be sustainable for the long run. All right. And summing it up all, I guess there is not much strength visible on the upside. Neither there is some weakness visible on the downside in mostly all of the sectors except the auto pack. And even in the auto pack, only one or two stocks are showing complete clarity. So it clearly means that this is not a time to go aggressive in your bets, whether it is on the upside, whether it is on the downside. It's probably time to keep your head cool, wait for better times, not in the sense that the prices will go higher, but in terms that once we have a clear trend, only then you should be initiating trades. All right. Trade less, trade wisely. Thank you.